All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So the testimonies keep coming, the testimony keeps coming, right? So those of us making profits and the rest. So the truth is that this channel is for our benefit, it's for all of us, it's for all of us, not only for me, for all of us. So all the questions and the rest, do well to send them below the video. The channel is for all of us. And if it's your first time joining, probably you've not been joining our videos, you've not been watching our videos on trading and the rest, no problem, no problem. You can still catch up, right? So, as I said initially, this channel is for all of us. Concerning the daily signals and the rest, they are all for us, right? So that is why it's very, very important for we to share these videos to those of them close to us, our relatives and the rest, so that they will be able to be joining, taking the daily signals in the forex market, right? And if it's your first time joining this channel, you've not clicked on the subscribe button, you've not subscribed, do well to subscribe. Do well to subscribe so that you will be able to receive everything and also only your notification in the forex market, right? So today we'll be talking about the phases in the forex market, right? So when you ask people, then people know about structure, but yes, why some persons know about phases in the market and the rest. So the truth is that whether you know about the phases or you know about structures in the market, this is in an unusual way. I'm coming in an unusual way. Remember, I will only teach what I use. I will always show us what I use in the forex market. Anything I don't use, I don't care. I'm not going to bring it to this channel, right? So this is what I do. I will carry us through what I do on a daily basis, my analysis in this market, what I do before entering for a buy or sell, and looking at the faces in the market, how it will help you, how it's also going to help me in the forex market, right? So every day when I wake up, the first thing I go doing is to check the news, right? I check the news coming out for that particular day. Not only news, but high impact news. I quickly go to the checking the breaking news, possible news that will be showing up for that day, right? So after that, I get to my chart. After that, I get to my chart. When I get to my chart, um, this is one of the mistakes most persons also make. They try zooming in their chart this way. Now, when I ask, they say, no, 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 I want to see everything. I want to see everything. The truth is that you can never see everything in this market. You can never see everything. Like you are zooming it in because you want to see everything. I want to see the candlesticks. No, doing it like this, it looks sweet, it looks interesting, but this is a killer. It kills the individual. It blows our account. It makes one to lose a lot of money, right? So the first thing I do after coming to the chart, I try to zoom out my chart at least three times. Three times. What do I mean? I come to zooming out. You can see zoom out. One, two, two rather, three. You can see three times, at least three times. Sometimes I go ahead to make it four. But even though you don't like zooming out your chart, at least it should be three times. It will help you to see the overall market structure, what is happening, what has happened previously, and what is the possibilities of it to happen again in the future, right? So not only that, you do that in your higher time frame. You do that in your higher time frame. You go doing it in your higher time frame, not zooming it in. Zooming it in, at the end of the day, one will end up losing because by the time you zoom in, you will not know what is possibly going to happen or what has happened previously, right? So having said that, we now move to the phases in the forex market, right? So there are different phases in the forex market, and all these things affect the market in one way or the other, right? So we move to there are different phases in the forex market that affect and influence the market positively or negatively. They affect both positively or negatively. And a good understanding of it gives one an edge in the forex market. By the time you understand these different phases, understand the structure, understand the phases the market is, right? So in life, to everything, there is time and season. To everything, there is time and season. A time to be born and a time to die, a time to trade and a time not to trade, right? A time to know that this market is in this phase and a time not to know that this market is in this phase, right? This is what I do. These different phases affect the market both positively or negatively, and you are the one that decides the approach you're going to take for it, right? So it gives an edge in the forex market. So four phases of the market. We have four phases in the market. Now I'm going to take us in the unusual way. In the unusual way, these four phases, we have the accumulation phase. Before going to explanation, accumulation phase, we have the advancing phase, we have the distribution phase, and we have the declining phase. I come again, the accumulation phase, the advancing phase, the distribution phase, and the declining phase, right? So we move to the accumulation phase. He said this is a phase found at the base of your chart, right? Or at the support zone after a long sell in the market. It is also known as the resting phase in the forex market, as or a long-term range in the market before a reversal for a buy. And before going to show you on the chart, this is what it means. Let me break it down. Let's make it down, right? So you see a market, nothing in life buys forever and nothing in life sells forever, right? So you see a market making a lower high, lower low, lower high, lower low, lower high, lower low. That is making lower highs and lower lows towards a support. Will that same market sell forever? The answer is simply no. That same market will not sell forever. It will get to a point that market will start buying or go back for a buy. But before it buys or go for a buy, it has to rest. It starts to rest. It's just like somebody having a 200 meters relay race, or depending on the, you have to rest before you continue another journey. You don't just sell, 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 sell. Then after selling, you start buying. Market does not, especially when the market has been in a downtrend for long. What do I mean? For 3 months, for 6 months, for 1 year. You don't just expect it to reverse and start buying. It has to pass through a phase known as the resting phase. And that resting phase, okay, let me make it easier, is also known as a range in the market. It's also known as a range in the market where market will be negotiating at a support zone. So that is what is called the accumulation phase. After a long downtrend, after a long downtrend has lasted for long in the market, you see the market ranging. That is, to get the resistance, it will stop coming back to a support, stop there, getting to a resistance, stop coming back to a support, getting to a support, stop getting back to resistance, from resistance to support, from support to resistance, from resistance to support. You see the market making that range, right? So some of us, when we see such thing happening in the market, we will be like, oh my goodness, why is the market ranging, right? The market is even ranging to your own advantage. When you see market making or staying in a range for a long time, it's for our goodness, it's for our benefit. Because when that same market breaks out, oh my goodness, it's going to move to that direction for long. When that same market breaks out, it's going to move to that direction for long. So whenever you see a market ranging, especially in the accumulation phase, after a long downtrend, just wait for the breakout. Don't assume that the market will reverse for a buy. No. And that's another thing. Don't always assume that the market will break out for a buy. Provided it's in an accumulation phase, if you really want to trade, trade it as a ranging market in an accumulation phase. Don't start buying the market for a long time thinking that the market will buy. Allow the market to break out before you go for a buy, else you trade it as a ranging market in the accumulation phase, right? The longer the range, the longer when the reversal happens, it's gonna be in profit. Right? This is example of what I'm trying to talk about, right? So you can see this after a long downtrend, especially in your higher time frame. I'm going to show us on the chart, on my own chart, how it looks like, because this one is the one that we use on the slide, right? So after a long downtrend, the market has sold and sold and sold and sold, sold and sold. It will not just reverse and go for a buy. No, it will have to be in a state of negotiation, ranging from support to resistance, from resistance to support, from support to resistance, from resistance to support. That's how it's gonna keep going. It will keep going like that for long. It will keep going like that for long until, if you wish to trade, trade it as a ranging market only in the accumulation phase. Don't start selling or selling for a long time or buying for a long time until the market breaks above the obvious resistance, that obvious resistance zone in that range. When it breaks above, always wait for the market to come back for a retest or to make a correction, and it will always come back to that zone, especially when that market has ranged for a long time. It will always come back to that zone. When it comes back to the previous, the broken resistance, now turn support, you can now go in for your buy. This is as simple as that. You must understand the phase. So by the time you get your chart this way, the first thing you ask is, what phase is the market? Yes, you ask, what phase is the market? Is the market in an accumulation phase? Is the market in a different phase? So that's the most important thing in the market. So by the time we move back to our slide, you can see um, you can see this. So that's how it is. Then we have another phase in the market aside from the accumulation phase, right? So that same phase is known as the advancing phase. That same phase is known as the advancing phase. So what is this phase? This phase occurs after a breakout from the accumulation phase, right? So that market has been ranging. It will not just range forever too. It will not range forever, especially when it comes to major currency pairs. It's not going to range forever. It will get to a point, it will break out. And the possible place for it to break out, especially in advancing phase, is to the upside. So allow the market to break to the upside. Allow the market to break to the upside. When it breaks to the upside, not a little break, you now say the market has entered advancing phase. No. The phase occurs after a breakout from the accumulation phase, right? So it shows that the institutional traders have taken a step ahead for a buy. That's the number two. It shows that the institutional traders have taken a step ahead for a buy. Remember, when market has broken a zone, it shows that there is strength towards that direction, right? So for a market to break a consolidation, or for a market to break a zone that has been maintained for months, right? Because the accumulation phase can last for months, right? So for market to break a zone that's been there for months, it simply shows that that market is very strong, right? So allow the market to break perfectly, not a small break. We now enter for a buy. No, allow the market to break perfectly. A perfect break is a call for a buy. Allow it to break perfectly. Possibly wait for a retracement. Wait for a retracement, because oftentimes market will always come back to the place it broke. Not buy. No, because it has broken. Yes, oftentimes market will always come back to the place it broke. You can now wait for candlestick confirmation and do what? Take your entry, or better still, allow a small flag or market to give you a flag pattern before you go in for your buy in the market, right? Market begins to make higher highs towards the upside. After the break, you will now see market, or you now find market making higher highs towards the upside. You find market making higher highs towards the upside, right? So this phase is better traded for a buy. Once it has broken the resistance zone to the upside, do not think of shorting the market. I come again. Once it has broken to the upside, do not think of shorting the market. All you should start thinking of is buy. Only buy in the market, but buy conservatively. Wait for a retracement, a good retracement in the market before you enter for your buy. This phase is better traded for a buy. Can make use of 6 months before getting exhausted. This advancing phase can even last 3 months, 6 months, 1 year, depending on the time frame you are using and the type of trader you are. Can last for 6 months, 3 months, even up to a year, trending up 2 years, 3 years, trending up. So what is this advanced phase? Advanced phase, or let me put it in another format, is still known as, or is seen as, when your market is making a low, a high, a higher low, a higher high, a higher low, a higher high. In other words, we call it the uptrending market. A perfect uptrending market is known as an advancing phase. I'm trying to bring it down. A perfect uptrending market is known as an advancing market. So you see market, this is a low, a high, a higher low, a higher high, a higher low, a higher high. So whenever you find market making this move, it's simply in an advancing phase. We will spot it on the chart. We will spot it on the chart. I will spot it on the chart right now. So whenever you see the market making a low, a high, a higher low, a higher high, a higher low, a higher high, that same market is simply in an advancing phase. So you trade it as an uptrending market. Don't think of selling the market. Selling the market in this situation simply means you want to trade against the trend. You want to trade against the trend or swim against the ocean. It's gonna backfire. It's definitely gonna backfire, right? So after the advancing phase, the market moves into a different phase known as the distribution phase, right? These are different phases of the market. Distribution phase. Now, what is this distribution phase? This is a phase found at the resistance zone. I'm gonna show us on the chart. This is a phase found at the resistance zone. It's a phase found at the resistance zone, right? So it's also a resting stage after a long buy. This is also a resting stage after a long buy. By the time the market makes a low, high, higher low, higher high towards that resistance, that market will not buy forever. You remember your law of demand and supply. That market is not going to buy forever. It will get to a particular point, that market will start ranging, consolidating, negotiating before reversal, especially when the buy has stayed for long, 6 months, 1 year, 2 years. It will get to a point, it will start doing what is called consolidation. And when it start doing that consolidation, there is possibility for the market to reverse, because the market will not just reverse. Let me show us on the chart right now. Let me quickly show us on the chart right now. So let's see if we can spot it here. Let's see if we can spot it here. This is until we get to understand these phases, market, that's when market will not be easy. You can see market buying, buying, buying for long, buying, buying for long, buying for long, buying for long. But when it got to this particular place, what happened? It started ranging. This market happening right now. It started ranging. Look at, it started ranging from 2021 and ended. Okay, it started ranging 2021 January and ended June. June. You can see 11 June 2021. So you can see 5-6 months for the market has been in a range or in a distribution phase. It's known as a resting phase. At that point, you cannot force the market. At that point, you cannot change the market. Nothing can be done at that point. All you got to do is to allow the market to do its thing, and you follow the direction and you make money. And not only making money, you see yourself making money reasonably from the market, right? So distribution phase is found at resistance zone. One thing you can do is to allow the market, but some persons will be like, how do I allow market since the market is ranging for 6 months? How do I allow the market since the market is ranging for 1 year, right? So it's not a problem. You can be buying at a support, selling at a resistance in that range until there is a breakout. And don't assume that the breakout will be up or down. Allow the market to tell us the direction. Allow the market, then you can now follow the direction of the market. You can now follow the direction of the market, right? So it occurs after a long buy in the market. It occurs after a long buy in the market. So after a long buy in the market, that's when you see this market happening. After a long buy in the market, you see market buying, buying for long. After a long buy, that's when you see it happening. And after that long buy, expect a long range that can even last for 6 months, 1 year before a possible reversal. It is also known as a range at a sensitive zone or as a sensitive resistance zone. We say that it's also known as a range at a sensitive resistance zone, right? So we move over to, right, look at a good example here. You can see this is where the distribution is happening. This is where the distribution is happening. You can see the distribution happening here. So you can see it after a long buy, and this distribution can take a longer time before they fall in the market, right? So we have the fourth stage right now, the fourth phase, which is also known as the declining phase in the forex market. The declining phase, right? So this occurs immediately after the distribution phase. I come again. This occurs immediately after the distribution phase. After the market has done that range at a resistance, not at a support zone, negotiation after that long buy, and the market enter a distribution phase, start ranging. So it's when it's not ranging for a breakout. So when it now breaks to the downside, towards the downside, after that long range, you can now say the market has entered a distribution phase, breaking to the downside, and you have to wait for a possible retracement back to the place it broke. It broke to the downside, so it's now going back to the expected what as a resistance zone, right? So occurs after a breakout from the distribution phase, occurs after a breakout from the distribution phase. After that breakout from the distribution phase, shows sellers are now in charge, right? It shows sellers are now in charge. So you don't think of buying the market. You only think of doing what? Shorting the market. You don't think of buying the market. You only think of shorting the market in the market. Form lower highs and lower lows towards the downside, right? The downtrending market, remember a characteristic of downtrending market, a high, a low, a lower high, a lower low. So it forms lower highs and lower lows towards the downside, right? Not only that, it's good for what? Sell in the market. It's good for a sell in the market. It's good for a sell in the market. So this is very, very important, right? So let's see a good example. This is it. You can see a good sell. And what the longer the range, the longer, or it's trying to tell you that when I break out, it's gonna be massive. When I break out, it's gonna be massive. When I break out, it's gonna be massive. So let's go to our chart, see if you can see it. Okay, this is something after this long distribution phase happening here. After this long distribution phase happening here, long distribution phase that happened here for like 5-6 months, there was a breakout. Remember, I said the market, there's possibility for the market to come back to where I broke. Look at this. After breaking below, you can see after breaking below, it went back. So you have to wait back at that broken support. You have to come and test it as now a resistance, right? So look at it. It came back at the end of the day. Now going forward, a sell in the market. This is a key. This, remember, you zoom out your chart. This understanding of these phases in the market will give one an edge in the forex market. We give one an edge in the market. It will make trading so easy that you will make a whole lot of money. It will make trading so easy that you make a whole lot of money in the forex market, right? So as a way of recap, remember, if you are enjoying this video, do well to like, subscribe, share to people, subscribe, but subscribe and on your notification so that whenever we upload, you're going to see them. We started with the phases in the forex market as a way of recap, right? And we went ahead to talk about the different phases that it affect the market either positively or negatively, right? So there are 4 phases of the market. We have the accumulation phase, we have the advancing phase, and we have the distribution and the declining phase, right? We went ahead to say the accumulation phase. This is a phase found at the base of your chart or at the support zone after a long sell in the market, right? It can last for 3 months, it can last for 4 months, it can last for 5, can even last for years in the market, right? A good example is this we got here. Look at it at the break, right? You must trade it. If at all you want to trade at an accumulation phase, you must trade it as a ranging market. Don't buy for the long, don't sell for the long time. Buy at a support, take your profit before resistance, wait for another confirmation, take your profit before the support zone until there is a breakout in the market, right? So advancing phase, this phase occurs after a breakout. This is it. It shows that the institutional traders have taken a step ahead for a buy. It shows that the institutional traders have taken a step ahead for a buy, right? So market begins to make higher highs towards the resistance zone. So um, they will enter the advancing phase. The advancing phase is a phase of is still known as your uptrending market, right? Uptrending market occurs after a breakout from accumulation phase. It shows that institutional traders have taken a step ahead. So remember, accumulation is a range at the support. Advancing is like an uptrending market where market is making a low, a high, a higher low, and a higher high in the market, right? So market begins to make higher highs towards the resistance zone. So this is a good example, right? So we don't mistake it. We shouldn't mistake it. We nearly made some certain things here, but we shouldn't mistake one for the other one. So we enter the distribution phase. This is a phase found at the resistance zone. It is known as a resting phase. It is known as a resting phase in the market. Whenever it's seen, especially at the resistance zone, all you have to do is to approach it as a distribution phase market. Sell at support, buy at support, sell at resistance, buy at support, sell at resistance until there is a full breakout in the market. It occurs after a long buy in the market, right? It's also known as a range at a sensitive resistance zone. So this is the distribution. This is the distribution in the market, right? This is the distribution. This occurs immediately after a distribution phase. Now, this is the declining phase. A phase immediately after the distribution phase, we go into the declining phase. Occur after a breakout from the distribution phase. Shows sellers are now in charge. In the distribution phase, you don't think of buying, you think of selling. Forms lower lows, lower highs, and lower lows towards the downside. Good for a sell in the market, right? This is it. So this market is very it will have to make something like this: high, low, lower high, lower low, lower high, lower low. This market is very, very important. I can see some of our viewers, I can see what we are having right now. So do well to share, do well to share for people to join and benefit from what is happening. That's the most important thing. It's for us, it's not for me. The channel is for us, it's not for me alone. Is for us all, for we to be able to make profit, right? So we went ahead to spot a good and reasonable example in the forex market. We went ahead to spot a good example in the forex market. So do well to make some bucks, to make good money from the market. Do well to make some bucks and making good money from the market. All right, thank you for joining us today. Thank you. All right, bye now.